Perseverance, a lowly virtue whereby mediocrity achieves an inglorious success. Ambrose Bierce. My friends, perseverance, that's what it is all about. Not only in learning how to chart the markets and becoming a charting master, a master of technical analysis, but in life itself. Persevere. What you spend your time on is who and what you are. And if you want to be a supreme chartist, if you want to be able to have a preternatural ability to follow price movement 10 to 15 minutes a day, that is all we ask. And it's all free. You just open up an online account where you can practice trade, paper trade, and you practice until you get this down. It is not rocket science. It is charting art. By the way, if you are a subscriber at chartingwealth.com, which you do for free, go there. You will be receiving The Trend is the Key. It is one of our great training videos. Take you about 5 to 10 minutes to listen to it. That will improve drastically. Again, day after day, taking these trainings, 10 to 15 minutes following the charts with us. What we show you applies to any chartable stock or ETF. We will touch on Bitcoin. Advice I gave you yesterday was good advice for practice trading. We'll talk about that as Bitcoin's down 7.5% today. And we're going to jump into these charts. What do we see happening with the S&P 500? Still in a confirmed up move on the weekly chart, up for the day 1.38%. We see the derivative oscillator still losing some momentum, price percent oscillator heading up. We look at the high the prior week, 381.13, 384.79. So that's nice to see things popping up. Of course, the confusion here has been on the 2-day chart, up and down and up and down. And of course, crosses over at the end of the day, going back up after going up and then down and now back up again in short order. What do we see happening? We've been sliding sideways on that 2-day chart, but of course, still above that weekly trend line, crossing back over. Derivative oscillator had been negative. Now is, on the 2-day chart, now is positive, and price percent oscillator crossing over just barely. We look at the half-day chart, and we see where it didn't cross over in the morning, but did in the afternoon. So that's where we are. How long will this go on? How long will the market keep going up with a new president? We shall see, my friends. I guess if you just keep printing money, just keep changing decimal points on the Federal Reserve's balance sheet in the right direction, things will just keep inflating and going up. So we'll see. What do we see going on with the Qs? The NASDAQ 100 up big time, 2.33%. Now we look at the weekly chart, been laminated for a while, well, sliding across, crossing over going up, crossing over going down. Now it's pulling back through, as we talked about might happen if there's lots of up movement, and of course there is for the day. We see things pulling away up 2.33%, reaching, of course, a higher high, a high of 324.75. 2 weeks ago, 319.39. Last week, 317. So again, hitting a higher high, trying to pull away from the red signal line. Derivative oscillator still positive. 2-day chart, not quite crossed over, going up. We shall watch, wait, and see what's going on there. And if indeed that's going to be a crossover in the next 2 days, again, strange, odd times we live in. We leave and go from, well, we see that the price percent oscillator, like I said, is not quite crossed over yet. Derivative oscillator still negative. A big green up candle that has formed. We look at the half-day chart, and of course, it crossed over in the morning, a little higher in the afternoon. We'll continue to watch and see how things settle in the rest of this shortened trading week after the Martin Luther King holiday and the inauguration. That's where we are as far as stocks go. What's going on 20-year bonds? They were up also, not a lot, 0.10%. We have that solid green candle, slowdown in the down movement, price percent oscillator still heading down, derivative oscillator gaining downward momentum, prices below that weekly trend line. 2-day chart, what do we see there? Just a sideways slide, another doji. Lots of indecision, trying to figure out what's going to be going on. What would we expect? Well, if stocks really keep zooming up, then bonds consequently should be going down. Why? Because money typically leaves bonds and goes into stocks when the market's doing really well. That typically portends that the bonds will go down, and the opposite is true. If the market starts to crash, we can expect bonds to take off. So we'll watch, wait, and see. We go to the half-day chart, and of course, still heading up a little bit. Price percent oscillator up, derivative oscillator losing some momentum. But again, that's just sort of a continuation from that big bump up that we saw back on Wednesday the 13th. That momentum still sort of playing its way out. So we'll continue to watch and see how bonds shape up. Again, we are still, we still have that 2-day heading down until it gets a confirmed crossing. Lastly, we go to gold, up 1.63% for the day. We see that the price percent oscillator is negative but flat. We see the derivative oscillator losing downward momentum. After a big down week last week, we see a green spinning top. Again, a slowdown in the down movement, lots of indecision in that continued direction. What do we see on the 2-day chart? First green open box candle we've seen in a while. It is a spinning top, indecision, but tending up. And we see the price percent oscillator negative, but heading up. Derivative oscillator still gaining downward momentum. That's from those big red down candles that you see. 2 days of up movement doesn't change that momentum yet. We'll continue to watch. I'm ready for gold to start a-booming. I want to get into gold, but not yet. What do we see on the half-day chart? We see it crossing over in the morning, heading up, and about the same in the afternoon, like we said. For the day, up 1.63%. So again, waiting for these markets to sort themselves out. We don't want to see everything going up together. Not healthy. Want to see bonds in one direction, stocks in another, perhaps gold going with bonds, maybe. So we'll continue to watch, wait, and see how this is going to shake out as we get out of this week with all the turmoil and tumult, and see how things keep going. Now, lastly, said I'd get to Bitcoin. Down for the day, 7.49%. We look at the Bitcoin chart, and of course we can see where it peaked back on those 2 weeks. That is the week ending the 8th of January and the 15th of January. And of course, what do we see this week? A drastic drop-off. Went from big green up candles to a little dumpy red open box candle with a wick on top. Price percent oscillator, consequently, it's still positive, but a little less than flat. Derivative oscillator going into its 3rd week of down movement. Look at the 2-day chart. And of course, our first red candle that we have seen going all the way back to the 11th of December. And we look at the first really red candle of that size going all the way back to the 27th of November. Now, the price percent oscillator has not crossed over going down yet, but looks like it's getting pretty close on that 2-day chart. Gave you that warning that, we just didn't see Bitcoin grabbing a lot of momentum. Along consequently with that is the half-day chart. Also down in the morning, further down in the afternoon, derivative oscillator gaining downward momentum, price percent oscillator heading down. So again, Bitcoin just sort of still digesting those big gains that it had a couple of weeks ago. So we'll continue to keep an eye on things. Hope that you are practice trading Bitcoin when you have an opportunity. If you are interested in it, our charts do work on Bitcoin, have worked quite well. So we'll continue to watch and see how this market continues to move. That's where we are, folks, as we end the day on Wednesday, go into Thursday. God bless, all the best from the whole team here at Charting Wealth World Headquarters.